All right, let's get right into it. What if I told you that some of the best wealth-building stocks out there are completely off the radar? Seriously, they're not trending on social media, nobody's shouting about them, they're just quietly sitting inside the Nifty 500, hitting that perfect sweet spot between value and growth. So today, we're going to break down a really powerful, data-driven system to find them. You know, so much of investing these days feels like you're just chasing hype, right? Jumping from one hot tip to the next. But let's be honest, that's a frustrating game, and it rarely leads to any kind of consistent return. We're going to talk about the alternative, a disciplined approach to actually building long-term wealth, moving away from that frantic chase and toward a clear, repeatable system. So here's how we're going to do it. First, we'll talk about the problem with all that hype. Then I'll introduce you to the value and growth framework. After that, the fun part, we'll reveal the top 10 companies it found. Then we'll get into the right investor mindset, and we'll wrap up with a solid plan for building real wealth, not just making bets. Let's just start with a simple truth, okay? The most talked about opportunities are almost always the most overpriced. Real wealth building happens when you find quality before it becomes a headline. If you're just following the crowd, you're always playing catch-up, buying high and just, hoping for the best. The real advantage comes from having a system that helps you look where nobody else is looking. And this quote, this just nails it. When you rely on tips, you're basically handing over control. You don't really know why you're buying a stock, which means you'll have no idea when you should sell it. But a framework, that gives you control. It gives you consistency. It's really the difference between being a passenger on a chaotic ride and being the pilot of your own financial journey. So what's the solution to all this noise? Well, it's a powerful, data-driven framework. I want you to think of it like a really sophisticated filter. It sifts through hundreds and hundreds of companies to find the few hidden gems, the ones that are both high quality and priced reasonably. This is how you find the signal in all that market noise. Now, before we jump into the full framework, there's one key term we have to get straight: ROCE, or Return on Capital Employed. All this really tells us is how good a company is at turning its money, into profits. A business with a consistently high ROCE, it's like a star athlete. It's just performing at an elite level. It's one of the absolute best signs of a quality business, and it's right at the heart of our system. Okay, so here it is, the system itself. 7 filters to find those gems. First, a PE ratio under 20. Why? Because we refuse to overpay. It's that simple. Second, that ROCE we just talked about, we want it over 15%. That's our main quality check. Third, debt to equity below 1. We want businesses that aren't drowning in debt. Fourth, we need to see earnings per share growth over 10%. I mean, the company has to be going somewhere, right? Fifth, return on equity also over 15% to make sure shareholders are getting a good return. And finally, we look at 2 key profit margins to confirm the business is an efficient money-making machine. Put them all together, and you have an incredibly powerful screen. And this is really the key, right? Our framework combines 2 powerful ideas that people usually keep separate. You've got some investors who only chase amazing, high-quality companies, but they pay such a crazy high price that their returns are terrible. Then you've got others who only hunt for cheap stocks, but they end up in these value traps. Companies that are cheap for a very good reason, they're broken. The real magic happens when you find quality at a reasonable price. That is our edge. Now for the really exciting part. We didn't just come up with a theory here. We actually applied these 7 rules to all the companies in the Nifty 500 index. So let's see what this powerful filter actually dug up. And here are the results. 10 companies that passed every single one of our checks. You can just see the pattern here. Take a look at Natco Pharma. Low PE, strong ROCE, almost no debt. Or look at companies like Castrol India and Coal India. Both have a very high ROCE, which screams quality, but they also have low or very low PE ratios, which signals value. Every single company on this list tells a similar story. And you know what's really interesting here? Look at the diversity. We've got pharma, energy, metals, manufacturing. It's all over the place. And that is the key takeaway. This system isn't trying to bet on one hot sector. It's designed to find a pattern of fundamental strength and good valuation, no matter what industry the company is in. And that's a much more durable way to invest. Now, even within this list, you've got a whole spectrum of opportunities. You've got more growth-focused plays like a Natco Pharma. You have those deep value stocks like Coal India and BPCL. And then you have these balanced, steady compounders like Mahanagar Gas. The point is, the framework uncovers different kinds of opportunities, so you can pick what fits your own style. Okay, having a list of stocks is great, but it's really only half the battle.
The other half, and maybe the more important half, is having the right mindset. Because without the right psychology, even the best system in the world is going to fail you. This is what separates a real long-term strategy from just another stock tip.
Think about the biggest mistakes investors make. First, chasing stocks after they've already shot up. Well, our PE filter stops that dead in its tracks. Second, panic selling when the market dips. But when you know you own a high-quality business, you're much less likely to do that. And third, ignoring the fundamentals and just staring at the price. This entire framework is built on fundamentals, not on price charts.
So why do we do all this? Why all this focus on quality and growth? It all comes down to the incredible power of compounding. If you can find companies that consistently grow their earnings by, say, 15 to 20% a year, and you just hold on, your wealth just multiplies over time. This isn't some crazy theory. It is the mathematical engine that creates long-term wealth.
All right, let's bring it all home. How can you actually put this strategy to work? Because this isn't just about the list of stocks we found today. It's about giving you a process that you can use for years and years to come. Here's your 5-step action plan. It's simple. First, you screen the market using our 7 criteria. Second, you shortlist the companies that make the cut. Third, and this is so important, you study the actual business, know what you own. Fourth, you buy gradually, maybe taking advantage of market downturns. And finally, step 5, you hold for the long term and let that compounding magic do its thing. It's a process you can repeat over and over again. You know, at the end of the day, it really boils down to this one thing. The market is basically a device for transferring money from the impatient to the patient. A system like this one gives you the foundation for discipline. It helps you stay calm, trust your analysis, and just ignore all the noise. And that discipline, that is your greatest asset as an investor. And that's what it's all about. Chasing stocks is a game of chance. Building systems is a strategy for success. The goal isn't just to find the next hot stock. It's to become the kind of investor who can find them again and again and again. The key is the framework. And now you have one.